First reorganization, July 1, 1948, increased capitalization, lending capacity, and broadened authority to purchase and make commitments to purchase mortgage were given an FNMA in its 1948 reorganization. Rapid increase in activity followed for later changes, increased maximum lending capacity to a high of several other statutory and administrative changes over a 6 year period. Alternately expanded and restrained FNMA activities under its 1948 character. Developments during that period showed clearly that FNMA was not serving as a secondary market facility as that term is ordinary understood. Rather, it had become a special sport for government sponsored housing and mortgage programs which were not acceptable in private financial markets. The association policy of purchasing FHA and VA mortgage at per regardless of market price built up rather steadily its holding chiefly mortgage least acceptable to private investors from July 1, 1948 to November 1, 1954. FNMA purchase of mortgage were 4.3 billion and sales only 1.4 billion. Its holding increased from 50 million at the beginning of the period to 2.4 billion. Most of FNMA activity was in VA mortgage. Secondary organization November 1, 1954. After 1948, as FNMA was transformed into a primary source of mortgage funds of support, both private and government developed for establishment of an organization which would operate as a true secondary mortgage facility and with limited dependence on federal funds. Under the Housing Act of 1954, FNMA was again recharted and was directed to reorganize its structure into three separate options, providing for a secondary market for federally underwritten residential mortgage, assistance for financing selected types of mortgage originated under special housing programs, and three, management and liquidation of mortgage held or acquired by contracts under its previous character. For each of these operations, the association was separately accountable. New secondary market facility. The 1954 mandate from Congress required FNMA to prevent excessive use of its secondary market facilitate, which were to be self-supporting. According mortgage were purchased over the counter only at market prices not exceeding per a mortgage price schedule was established. Prices varied according to location and type of property, mortgage terms and market conditions. A purchase and marketing fee was introduced 1/2% of the outstanding loan balance of free daily marketable motor gas is I% 1% for other. The maximum amount of mortgage per dwelling unit eligible for purchase was increased from restrictive requirements eliminated were that mortgage he be held for a minimum period by originators before sale, that purchase be made only from original mortgage, and that purchase be limited to no more than one half of the mortgage organizations by these mortgage and to one fourth of FHA. New financing provisions were aimed essentially at ultimate substitution of private for federal ownership. Initial capital consisted of 21 million of capital and surplus from the former association plus accumulated surplus reserve and undistributed earnings of 7.2 million preferred stock. Total of the above 3 million was issued to the treasury by FNMA. Sellers of mortgage to FNMA were required to subscribe to common stock not less than 3% of the unpaid principal of mortgage sold. In addition, FNMA could issue jack to treasury approval debentures up to 10 times its capital and surplus, but not in excess of mortgage holdings, cash, and government or government guaranteed securities. Some objections were raised to the restrictive nature of an new secondary market facility But so long as funds for mortgage investment were readily available in private and secondary mortgage markets, investors made little issue of FNMA facilities, and protesting voices were not loud as increasing tightness took hold in private credit markets during late 1955 and 1956. However, the policies and operating techniques adopted to prevent excessive use of FNM secondary market facilities came under increasing pressure. As a result, liberalizing action were taken in the late summer and autumn of 1956. Requirements of subscription to stock by sellers of mortgage to FNMA were reduced to from the original 3% to 1% of outstanding mortgage balances. The association adopted a private market technique of combating credit strategy, issuing standby commitments for a period of 1 year. As FNMA raised the offering price on standby to near its own purchasing price for mortgage, it approached its old policy of supporting primary mortgage markets, but this time, however, FNMA and achieved greater flexibility in determining mortgage prices under the Housing Act of 1956, which authorized establishment of prices within the range of market prices rather than at the market price. FNMA activity under the new secondary market program remained small for several months. Mortgage funds from private investors were ample in late 1954 and early 1955, and requirements of the new program were not yet familiar to the market. As private credit became progressively tighter in late 1955 and 1956, and investors became better equipped with the new operation, purchases of mortgage by FNM increased rapidly as shown in chart 28. Just as before the 1954 reorganization, the bulk of FNMA purchase under the secondary market program was of VA mortgage. The sharp increase in mortgage purchases during 1956 and due in part to adoption by FNMA in late January of a mortgage purchase option plan allowing sellers to FNMA to repurchase the same mortgage at the same prices within 9 months. Adoption of that form of warehousing already in use in the private market, and a little later adoption of the previously noted standby commitment technique indicated the association willingness to embrace approved private market techniques to help ease mortgage credit strategy to finance its secondary market operations. FNMA has sold by November 1956 $300 million of short-term obligation to the public. Through June 1956, sales of common stock in the connection with its mortgage purchases amounted to a little over 7 million and net income from operations to 1 million. Clearly, there was still a long way to go before the 93 million treasury owner stock would be retired and the secondary market facility be operated under private ownership. Programs for special assistant management and liquidation, as previously noted, FNMA new character provided for two other separate functions: special assistant for mortgage originated under certain housing programs and management and liquidation of the exciting mortgage portfolio. Under the special assistant program, FNMA is authorized to purchase or make commitments to purchase such home mortgage as the president shall decide to be in the public interest. His decision is contingent upon the conditions in the building industry and the national economy, and 20 and to affecting the home mortgage investor market generally, or of affecting various types of home mortgage purchased under the program at prices to be determined by FNMA are limited, but while perhaps not at the time acceptable to private institutional investor would meet those standards under usual circumstances. Sellers of such mortgage are required, instead of purchasing FNM stock, to pay with 1 by 2 of 1% of the mortgage amount and 1% of for commitments to purchase a special assistance program is supported entirely by loans from the Treasury. Mortgage designed eligible for special assistance include those on housing in Alaska and Guam, on housing in defense or military programs, and for victims of major disasters on cooperative housing projects, and on housing built under urban renewal programs. By the end of 1956, only about $20 billion in commitments to purchase mortgage was outstanding, and less than 1 million is mortgage had been purchased. FNMA functions of managing and liquidating its portfolio of mortgage purchased or committed before November 1, 1954, with a minimum of adverse effect upon the home mortgage market and a minimum loss to the federal government in finance by borrowing from the treasury and the sale of unguaranteed debentures to private investors. The first public offering January 1955 was 57 million of 3-year debentures. These and subsequent obligations are distinctive from those issued under the secondary market program and proceeded from their sale are for the reduction of the association independence to the treasury. FNMA mortgage purchase and sales by type of investors and by geographic area. Comparable data are not available on FMA sales and purchases of mortgage by type of financial institution by geographic area or separately for the periods before and since the association 1954 reorganization. The data at hand, however, indicate clearly the dominance of mortgage companies among FNMA customers as shown in table 29. For example, from 1949 through 1956, mortgage companies comprised three-fourths of all sellers of mortgage of FNMA. Mortgage companies were also the largest purchasers of mortgage from FNMA as shown in table 30, but not so dominate as in sales. The dominant position of mortgage companies as seller to FNMA is of course consistent with the character of their activities, but the large volume of purchase from FNMA needed explanation. Most of those purchases were number of purchases and amount of purchases of mortgage for FNMA and percentage distribution of each. August 1949, June 1955. Note includes only institution purchasing or more mortgage during two specified periods. Source information in FNMA booklet. Investor purchasing or more of FHA insured and VA guaranteed mortgage from the association during the period August 1949 through June 1955 for resale to ultimate investors, and were made between mid 1953 and mid 1954 under the one program. See chapter 2. In exchange for FNMA take out commitments, the assurance of firm take out commitments from FNMA enabled mortgage companies to carry on a mortgage originating business when such commitments were not readily available from private investors. Among the main types of financial intermediaries, those purchasing the largest volume of mortgage from FNMA were also the most active purchases in private secondary markets, life insurance companies and savings and loan association and commercial banks. However, also accounted for a significant proportion of purchases. Life insurance companies were the dominant purchasers of both VA and FHA mortgage, but among other types of institutions, there was considerable variation by type of mortgage.